Welcome back. Well, it's been an eventful few weeks in South Africa's political landscape. We've witnessed significant developments, including the ANC losing its majority in parliament, the formation of a government of national unity, the inaugural parliament sitting, and the inauguration of President Cyril Ramaphosa, marking the beginning of the 7th administration. These rapid changes have had a profound impact on investor sentiment, initially sparking uncertainty, but now trending towards optimism. But the question remains, is this newfound momentum sustainable, or are there still underlying risks at play? To share his insights, we're joined by Colin Coleman, co-chair of the Youth Employment Service South Africa and adjunct professor at Columbia Business School. Thank you so much for your time, Colin. Of course, we've seen really positive investor sentiment to the point where even foreign investors that had stayed away from SA Inc. stocks are now going overweight on those South African-focused stocks. What are they hoping that the GNU is going to do for South African companies at this point?
Well, thanks very much for having me on your show. Yes, the markets are somewhat excited, and I'll talk about the pivot in the markets in a second. But let me say that the market excitement is mirrored by, I think, an excitement in South Africa amongst the majority of the population. There are obviously pockets of people that are not excited by the government of national unity, but I think there's renewed optimism amongst a broad spread of South Africans that a non-racial social democratic center is being established in this government of national unity, and that the power sharing arrangements will reflect a new power balance in South Africa. And that, in essence, I think is what the market is picking up on, that there is going to be a potential for South Africa to find its center on economic growth policies and stability. With bringing stability, you get investor confidence, and with investor confidence, certainly what we've seen is the financial markets responding very significantly with the banks, the retailers, and across the board, a rally. I was looking today over the last month, the South African banks and the South African retailers have effectively between 10 and 15% accretion in the share prices. But obviously what the promise is that will be reflected in real earnings and real economic growth across the board in the future. And the market is discounting the possibility that there will be better economic policies, better execution of those policies between the social partners, and that there will be a growing political center that will hold in South Africa, and with it, prosperity.
Well, it's quite interesting seeing how investors are responding versus how the ratings agencies have responded. Of course, they have said that they welcome the GNU and that it is favorable for the country, but there seems to be some caution there. Is that valid?
Look, it's true that as much as there's promise, there's also threats. And there are people with their daggers out for the government of national unity. And it will take some time for people across the board, including in the ANC political constituency, to accept the outcome, to digest it, and to see the benefits. The best way of both the rating agencies and the people of South Africa getting more comfort is through proper execution. So I'm afraid we may have a rocky road this week to the establishment of a cabinet of the government of national unity, because there will obviously be horse trading and negotiation. But once that government is up and running and the protocols of that cabinet govern the way that that cabinet runs, hopefully they'll get to the job of execution and people will start to see the benefits. And then I think both the population and the rating agencies and investors will be in a better position to judge. But I've lived in Goldman Sachs for 20 years. When I retired four years ago, analysts, their job is to look at risks and to evaluate them, not to bet on the future, but to do a probability weighting of the future. And so they will evaluate the risks associated. And as the government stabilizes the situation and comes out with policies which talk to the common ground between the partners. Remember, there are always going to be differences, but if they govern according to their common ground, there is much reason for optimism.
Colin, I'm glad that you mentioned the next stage now that we are looking into, which is the appointment of cabinet ministers. Are there appointments that the markets, investors have priced in as market-friendly and unfriendly?
And as I talk to people in the business sector, I think that there is common expectation, as was carried by the Business Day newspaper, that the current finance minister will continue in his position. I think the markets care about, the economic positions. They care about transport, energy, finance, trade and industry, those things that are in so-called economic cluster, but also the security cluster, because people want to see a stable environment and a campaign on both corruption and crime. And because crime has contaminated elements of the economy, like transport, logistics, energy, and others, it's important that the security cluster works in order for the economy to get back on its feet.
All right. Well, we do have to wrap up the conversation there, Colin. We could go on, and of course, we will be having additional conversations on this as the weeks go by. Thank you so much for your time. That was Colin Coleman, co-chair of the Youth Employment Service South Africa and adjunct professor at the Columbia Business School.